Hello and welcome to the Friday wrap up live here, presented by or brought to you by David Gockstein and hosted by me, Landy. Today is June 19th, 2026, and we're looking at Bitcoin to start here on the weekly. And I'm going to do a quick check in because I do have two special guests with me waiting in the back, and that is one Bits of Wealth and Nat Nat. So we're going to run through this really quick just to check in from where we were on Wednesday when I gave my Wednesday update. And realistically, not much has changed, right? I did talk about the 65 to 62 and a half level. I wanted to update everyone on kind of where the band structure is for Bitcoin right now, and it's right at 60K. So I think this is pretty important. Being right at 60K does mean that if we drop it on a weekly time frame, and the additional condition is lose the low, and I would say even in lower term time frames, lose the no, I didn't want that. Um, Lose the low in lower term time frames being especially a daily. We're already looking for expansion, probably a price replace band somewhere around the mid 50s, 54 to $56,000. So that really doesn't change. But if it does stay in this range, I wouldn't be surprised over time, especially if it does hold this low side structure, especially on closes. A little sweep wouldn't bother me in the 58 to 60, but if it did hold this area, get back above $65,000, the lower first standard deviation, there is the opportunity to mean revert back to the basis somewhere around 68 to 70, as the basis is currently sitting just above 70 at $71,000, likely to get that $1,000 tick down on Sunday if Bitcoin does close like this, somewhere around this level, which, to be fair, 63 and a half is an important area inside of the zone that I've been talking about here for Bitcoin. And in this case, we can go ahead and turn the levels on here, right? So we can see here on the daily, um, after I believe we were already starting to fall back into this level here, 65. So that would have been Wednesday. I think we were starting to sit right around $65,000. And for more immediate continuation, you would have wanted to see Bitcoin holding that on a close. Next big area is just hold this zone on a close between 62 and a half and $65,000. We did lose that 4 hour low side structure, then ran 62 and a half on Thursday's candle down to 61 and a half. If we do start to drop the lows at 62 and a half, I would be looking right back to 61, 61.5 to the actual low at 60,700. That would be open. And then, of course, all the way down to the lower second standard deviation, 58 to 60 or so, would be the next area to look to the downside. This is lining up to do one of two things: either go into a more compressive range. Structure is important. Need to hold higher low structure if you want to see this have a chance of expanding back up. But if it does bounce back up in higher low fashion, be aware of the highs above 65, just right around the high side structure, up to that 67, 60. What are we at? Like just over 67,000 at 67.2 or so. But be aware of the close open. It's right at the upper first standard deviation there and the 66.3 level. So essentially, if you do start to see it put in a higher low structure from here and maintain this uptrending structure off the lows, be aware above 65 of the close open high to that to the 67 to 60 area here. If it does start to get above there, 68 to 69K is right around where the upper second standard deviation is. And if we did actually see closes above there, that's where we'd be looking for expansion to 70 to possibly 72. Now, if we were to get upside expansion into that area, while maintaining higher low structure here, that's where you could potentially say, a little bit more up to like 74 or something like that. But that is not my first take on this until I see and can gauge daily closes specifically above $65,000. That's what I would be looking for from here. And then if I start to see the lows dropped, even in lower term timeframes, eyes on, and alerts on below 62 and a half, on this particular pullback into this area of interest as support, because if it is lost, then higher low structure is in danger and the lows and lower back in play. Obviously, the lower second standard deviation that I pointed out on the weekly starting to get down towards the top side of these two weeklies here, 54 to 56. You can split the difference at 55K there, but it is a wider zone between 52 and a half and around $56,000. So that's pretty much it for Bitcoin. I do not want to make my guests wait any longer here. Hopefully, they're ready to come on in. I will try to set the stage here in a proper manner here to bring them in. Let's see if I can do that. So there's Bits and there is Nat. And we have a weird placeholder, and I'm not really sure why. Let's see if we can get rid of that placeholder. There we go. So I'm not quite sure because we just came from a space with Wolf Bitcoin. Cade running a good space over there that's been going for quite a while. It was a macro space, turned into a little bit of a trader space. Now we've got a lot of people that are in there hanging out with Cade and the crew over there. But if Nat and Bits are here, you can go ahead and unmute and say hi. Let's see.
Guys.
Yo, yo.
What's up? What's up? So I know that Bits was hanging out on stage still. I didn't see Nat.
I was waiting. I mean, I was like, it's Landy. He could go 10 minutes. He could go 10 hours. I'm not sure. I'm gonna wait till he kind of cues me in, and then we'll switch over.
Well, I've got my analysis here, and I know that
Yeah.
the two of you don't necessarily even have to listen to my analysis because we generally have
Yeah.
the same areas, just different methodology of breaking down the charts here. Um, I know Nat has got some levels of liquidity. I'm not sure who kind of wanted to go first because I know Nat wanted to take a
Ladies
little bit
first.
of a different look.
Ladies
Um,
first.
so
Always.
so Nat, if you do want to show that chart or share that chart, you're more than welcome to. I know that you ended up dropping off, and I'm not sure if that was one of the reasons why. Let's see if we can't get that shared out here. And
Yep.
of course, so it puts me up there. Yeah. Give me 1 second here, Nat. This is a puppeteering the back rooms of the sources tab. So give me just a moment here and we'll get you full
Not a
screen here.
problem.
So yeah, so can you can you tell me what it is that you're looking at here? Because the audience might not be familiar, at least my audience might not be familiar
Correct.
with what this is.
Correct. So I am very big on liquidity. And oftentimes you find confluences between the liquidity levels and levels on the chart. For some time now, I've been keeping an eye on liquidity and seeing how it and when it does, how it reacts. Two platform that I really do like using. One is Market Monkey Terminal, which I show a lot and I reference a lot on the spaces with Wolf Bitcoin. But also, this is the second one. This one is Kiyotaka, and like it, and it's pretty cool. Um, it shows you the different levels of liquidity, and it shows you the orders that are sitting on each level. So right now it seems to be trying to get this small little pocket of liquidity, just tiny bit on top of it, around like 64K. There's over 4 million in orders sitting there. Above that, then it's 67, which kind of lines up to what you were talking about. The 4 million sitting at 67, 67.72, and then above that we have 70K, which kind of lines up with the levels that you were talking about as well. Above the 70K level, I have 72. So it's actually pretty in line so far. But what is very interesting is that over some time, we have been seeing whenever there is a big pocket of liquidity, price tends to gravitate towards it. Now, just to specify, this is Kiyotaka. I'm looking at Binance. If you looking at Binance BTC USDT. So a few weeks ago, here's what I did. I grabbed Market Monkey Terminal and I pulled up Kiyotaka and I just watched them grab liquidity on both sides. And they just ran and
Mhm.
grabbed liquidity both to the upside and to the downside, right? There was a big pocket. It's filled now. It's empty. That's the beautiful thing about Kiyotaka. Once it takes the liquidity, it tends to black out. It had this big area here that we grabbed on this red candle to the downside. It went up and grabbed some on here are following my cursor, where this red candle is to that. So now it's going back and grabbing some of the liquidity that's to the downside. There's 9 million sitting at 62 on Kiyotaka on USDT. On Market Monkey Terminal, that's the per USDC. There is a big pocket of liquidity, over 100 million, that's sitting there. And I'll gravitate to that screen in a second. But I just wanted to show the liquidity. And the reason why I am Kiyotaka this time is that by 50 at 50K, there is a big chunk of order that's sitting there. Last time we saw this big chunk of order, something of this size on USD, close to 30 million, it was at 60K. We hit 60K twice on the first go a few weeks, about a month ago, and then now we wicked below 60K. So the next
Yeah.
area of interest for me would be to see how price reacts once it gets to that 50K, because big areas of liquidity, they tend to serve as magnets, right? So over time, we see how price gravitates towards this. Granted, the liquidity cannot be used on its own. You have to layer them in with the TA, right? So I thought it was perfect to go right after you, because you have your 55 level, 52 level, 50K level do matter. But if we zoom out, um, just following the liquidity zone where the big pocket liquidity is, that's usually where the price tends to gravitate to. But there's some in between, right? As you can see, it's been slowly just grabbing them. If we even come from here, from 70K up in 70K, it grabbed the big area that was sitting at 65K, and it's just been, if you just start all the way down, follow the candlestick for in Leominster, just follow the candlesticks all the way down, they slowly grab the liquidity. So I expect something similar to happen, in which we kind of just slowly grab the liquidity. Doesn't mean that we're going to get there right away, right? So keep in mind, it's trying to grab the liquidity that's at 64K now. Above that, there's room to run to 67K and so on and so forth. But this is
Yeah.
telling me, what this is telling me is that there's interest in lower
Lower.
prices. Now the other
Yeah.
terminal, yes, and
So
you kind of see
stacked
that on your
bids.
chart as well, right?
Yeah,
Yes,
stacked bids, once it grabbed, you can see a local block of bids, but realistically the stacked bids are really lining up to try and defend the mid to low 50s, with very little overhead. So I mean, unless we see a bunch of orders being shoved into the books back at the most recent highs, if we do see higher low structure again, that's where we could absolutely rip through the books to the upside to some of those key levels that you were pointing out. So it's a really good, it's a good
yep,
visualization of the books, and you probably know just as well as I do, right? That when you have those gaps, those candles move fast, and they're usually lower
yes,
volume
sir.
until they hit
Yes.
that actual pocket.
Correct. And that's seen as a liquidity grab. That's when we refer to it when we see those quick candles to the upside. We usually say, whenever we're talking to each other, like, okay, this was a great quick liquidity grab to the upside. And in a bear market, what that's normal behavior. The price tends to grab the liquidity to the upside, before gravitating to its usual, downtrend. And we've seen that multiple times throughout the year. And we saw that last cycle as well. When Bitcoin enters a bear market, it does these liquidity grabs to the top, which can be seen as a seller's rally. There was about a month ago, we were on stream talking about the liquidity that was building at 80K. What did price do? We slowly gravitated towards 80K. Went above it, 82 and a half to 83. That was an area we were all looking at. Price went to it. And then what happened after? There was liquidity building down below, as we can see, and it just came to grab these, right? So I think it's at a very interesting spot. There's interest, there's stacked bids below us, the interest in prices below us. So it's going to be very interesting to see how it plays out. Now, one thing I do want to show you guys on Market Monkey Terminal, it has been a thesis, something that I have followed all year long, obviously along with this. So if you don't mind, Landy, just give me a second. Let me switch screens here, if you can still see it, and I will bring up my, if it lets me, I'll bring up my Market Monkey Terminal. Can you guys still hear me okay?
Yeah, perfectly.
Yep.
Sorry, I had kids running around in the background screaming at each other, so give me a sec.
It's okay. I have the same thing in my house, so it's all right.
Let's see. So I'll see it
Okay.
when you got it there. There you go. Perfect. Let's bring that in.
Oh, my screen
Um,
froze. Oh, there you
oh,
go.
it's getting there. It's a little
All right.
little little chop. There we go. There we go. Perfect.
Yeah. So I just like to just what I do it for anyone following. You can also to the audience, you can also do this yourself at home. You can just go in Market Monkey MMT dot app.mmt.gg and it brings this up. I like to look at futures, Binance. The 30 minutes is usually the one that gives us, the alpha. And even before we adjust the heat, we can already see the lines that are popping out. Usually the big yellow lines are lines of interest. And what's very interesting about this is that this gives us a clearer view of how the price tends to gravitate towards these pockets. One second, let me just adjust it just a little bit and let's zoom in. All right. So I've been studying this all year long, like I mentioned. And one thing that I found when it comes to market monkey terminal is whenever there is a big pocket of over 90 million, it tends to serve as a magnet. Granted, not right away. Again, as we can see, there is some buildup, just very slightly. So 64, 7, 70, 72, it lines up with certain levels on the charts. So what happens is once it does the quick liquidity grab to the top side, right? When again you hit the nail right on the head, Landy. Whenever there's a space between the liquidity, it's seen as a quick move to the upside, and the price gravitates to where it needs to go. In a bear market, it's usually to the downside. In a bull market, it grabs the liquidity at the bottom and then gravitates to where it needs to go. In a bull market, it's to the top side. But what's very interesting with Market Monkey Terminal is whenever there's a big liquidity pocket of 90 million and more, it serves as a magnet. We saw it when we were at the first go at 60K. There's a big pocket of over 200 million sitting at, I believe it was like 65K. And what did price do? We went to 65K. We broke above it. It was a beautiful move to the upside, which a lot of us were kind of looking at that point in time. We were all in line with BTC is due for some kind of a short squeeze or some kind of a seller's rally to the upside. We looked at the liquidity being that there was 200 million in order sitting at 65K. It helped hold price to the upside, obviously with the chart and different bids that were placed around different levels. So I say that to say this. Earlier today, on the stream with Lady Trader at 62K, there was about 101 or 102 million. I don't know if do you remember bits because we were on the stream earlier today as well.
I don't
So
remember the
that
exact
has
number.
increased. Yeah. So that has increased from 101 million or 103 to 114 million. So whenever we see this, whether the price goes a little higher to do a quick liquidity grab to the top, it usually works as a magnet. So what does this tell us? This tells us that at some point the price will gravitate towards that 62K level. And there's some slight buildup below it as well. So what can we conclude based on these liquidity is that again, when we look at Market Monkey Terminal and we look at Kiyotaka, whether it's 50K or 62K, there is definitely interest in the prices in lower prices. So I wouldn't rule out at some point we grab this liquidity that's sitting at 62K. And if we do wick below, it'll put us at that 60K, that support level. Then below that we have 58K, we have 55, 52, and 50K. What's going to be very interesting is seeing where what what happens to the price once it grabs that liquidity that's building up on Kiyotaka, on USDT at 50K. But overall, Landy, I think we've all been in the same page. We're all looking at this 4-year cycle. And I think we mentioned last time, and we touched on it earlier today as well, that granted, at some point, the 4-year cycle is broken. Everything breaks at some point, right? What we're used to, the indicators that we're used to, usually no longer work. So even on the equity side, you have the VIX now, But prior
Mhm.
to the VIX, it was something else. And prior to that, it was something else. So at some
Yep.
point, these indicators, they become not as effective as they used to. But as of right now, I'm seeing no evidence of it. Doesn't mean that the price is going to nuke overnight, right? We can go and grab the liquidity up to the top, but based on the liquidity levels, we can say there's interest at 62 in the 60s, and there's interest in price heading towards the 50s. I don't want to take up too much time because I know Bits has some stuff that he wants to share on his end, so I'll go ahead and pass the mic.
Hey, a great take, and something that I used to talk about because I used to actually go through all of the detail like this as well, and I'm glad that I have good friends and folks like yourselves because I infrequently cover this stuff. One of the things that I did want to express to some of the audience here is this is basically blocks of bids down below and asks above, right? So that's actually what this is.
Yes.
They can be limits, they can be liquidations. Some platforms will separate them out. One of the things that I wanted to ask you about before we move over to bits here is obviously order books can be spoofed. And usually when people are talking about spoofing, what they're actually observing is somebody who places bids and then removes them, or places asks and then removes them. We're headed into a weekend. Obviously, we had Friday where there was no traditional markets. It was a bank holiday, right? And what we've seen now since prices moved down into this area is essentially a layered set of bids put under it. And when you're watching this, I'm pretty sure do these update when those bids are pulled, not from these platforms?
Yes. So one thing that is actually a great question, Landy. That is why we only focus on the big pockets of liquidity. So what I've noticed in like studying market monkey terminal, studying Kiyotaka, is that the smaller liquidity pockets, those tend to be spoofed. They update once you refresh, it's no longer there, it's gone. But when it comes to the bigger pockets of liquidity above 90 million, those tend to kind of stay and not be spoofed. Does that make sense?
Yeah, and it actually makes sense from from somebody who's actually got size and wants to bid these areas. So to
Yes.
not remove that unless, unless there's something crazy that's going on in the market and market wide. Typically, normally, if you have over, if you're plunking down $100 million between, I mean, these are obviously larger players, could be single entities, multiple entities aggregating. Everybody's
Yes.
looking at what everybody does anyway and following into specific areas. But it is interesting to see these layered bids through the weekend. So I'm going to be curious to see as we come into next week. We'll have to have a conversation about it because I'm not going to have a live stream until Friday. And if you're always welcome back, either one of you and anybody that's that I'm in the trader groups with, but we'll have to check on it because I'd like to see. You had those layered bids that began to move. If you look at the structure from 80 from the more recent highs there, um, not the most recent highs in the local. What time frame is this, Nat? Is this 30 minutes?
Yeah, it's a 30-minute.
So you see the band of bids that was pulled as price kind of went into it, and they kind of went into looking like almost market bids in the structure just above price action to the left there. So if you
Yep.
look, you have that one band splitting all the way across when Bitcoin is running up to like around the 67K region and then headed
Yep.
back down. You had one band and it did move. But typically, so what Nat is saying is typically when you see, in this case, the yellow band on the heat map, those typically are pretty stable. And I would
Yes.
encourage those of you out there in the audience to go check it out and see how that kind of works. But,
Yeah.
Bits, thank you so much, Nat. You're so wonderful, and this is great information. I'm glad you're able to bring this to everybody. Hey, Bits,
Absolutely.
what do you got for us here? What do you got for us, bud?
I've got a very long rebuttal to go through here.
Yes.
Oh, I knew it. I knew it.
No,
Good,
I'm just
good.
kidding. No, I'm just kidding. Look, I mean, I'll pull up my chart and we'll talk about some stuff. But No, it's funny. It was good stuff here. Where's my
David,
message?
David, we're gonna at you, David. I'm gonna at you in the comments, David. You need to
Uh,
hear this.
that's so funny. No, look, he's he's not wrong about what he said that we give if then statements. He just worded it differently. He wasn't using language, or what did he call it?
Astrologers.
Astrologer
Yep.
language.
We're doing astrology for men and women, and that was very
Oh
specific. You
man.
need to include women in this.
Yeah, yeah, yeah. No,
Yes,
look,
you do. Yes, you do.
That's so funny. Look, my comments are pretty similar to what I gave last week, which is I'm not seeing any real acceptance below 60K yet. So therefore, I'm maintaining a cautiously optimistic outlook here, where I'm not ruling out the potential that this is doing something like this to go a little bit higher, right? I was looking at Nat. I wasn't using Kiyotaka, but I looked at Market Monkey. I looked at CoinGlass. Look, there's a nice little chunk of liquidity right here above this last little swing that we put in, where we didn't quite tap that 3-day range high that I was looking for. I'm wondering if there's not a move loading up here to put us up here somewhere, and then depending on what kind of strength we see on a push up like that for a retest or something. There's also some nice liquidity up here above that 82, 83K area as well. So look, I'm trying to just keep it pretty simple. I'm trying to keep it pretty simple. Stablecoin dominance. Again, sure, swept that Feb high. No acceptance above. In my opinion, this thing could easily reject here, make a move lower. Just like Bitcoin, no acceptance below. This thing could keep pushing, in my opinion. Higher time frames, like, okay, yeah, they look rough, right? Like monthly still looks rough, quarterly still looks rough. But I also have to just draw to your attention what I said last time, which was for me, everything is going to come down to this monthly close, which happens to be a quarterly close, which happens to be a first half of the year close. It's a big deal. And if this month closes, this quarterly chart's not going to look too bad. I'd say the new quarter has a fair chance of running up here towards current quarter high. Even if it is to resume lower, I think it could make a nice move somewhere up here towards that, and then ultimately head lower. Monthly chart, I'm kind of thinking the same thing. If this thing closes above that last quarter low here, and if it can get near this like 67K, which we have time, I mean, we're 11 days, but if it can get near that, I think it definitely opens up the possibility that we maybe look a little bit higher again here in the short term. And for me, like, one of the big things I like to do is just look at the levels. Like, I look at quarterly levels, weekly, monthly. I look at the opens as well, monthly open, weekly open, stuff like that. And right now, I'm not seeing anything super concerning. I'm not seeing anything super concerning here. I think if you got positioned off of this sweep here, I don't see anything that invalidates that just yet, for me personally. So I am still holding my long position on BTC here, and we're actually getting a nice little pop right now. We did make a move down to this like diagonal trend support here, and we did hold it. The idea that I was kind of throwing around was that came down, took liquidity below here, because Nat highlighted that there's quite a bit of liquidity here, like between 61 to 62. And I think that potential still stands. Like, you could still get a move that comes down, cleans up sometime this weekend, and then tries to head higher. But yeah, there's liquidity here, but there's also liquidity above. So for me, this was a pretty easy, like, no-brainer type of level to be like optimistically looking for an opportunity if you weren't already in from one of these other ones. And I think if we're just keeping things simple, and we really try not to complicate things, a lot of times, we make moves low into like support areas, whether it's like a diagonal trend, whether it's a horizontal area like a zone or something. It's really easy to get fearful, like when you're at the place where you need to be maybe a little greedy And it's easy to get greedy when you're kind of coming up into areas where you should be a little bit fearful or cautious, right? And that's the hardest mental flip to make, is that when you're on a run like this, it's very easy to think, oh man, this thing is just going to keep going up, and I need to add, I need to be adding size like up here after it's already had a very nice move. And then people will hold that as it puts in a move like this. And then down here, they start considering, maybe I should sell. Maybe I should sell that position that I bought up here because it looks like it's going down, right? And it's, you won't see it until you see it. Like, you won't see that in yourself until you can have a moment of self-reflection and just say, hold on, I'm kind of playing this game backwards, aren't I? Like, am I not supposed to be looking to buy down here and then maybe looking to sell like on opportunities to the upside? Like, why do I continuously do the opposite thing where I'm like, I'm buying up here and then I'm capitulating on the way down for some reason? So I'm still seeing a little bit of that here, man. It's quite interesting. I'm seeing some people that, again, on this move down here, they're like, oh, I think I need to short this thing. I think I need to short it down here. Right. But it was like up here, they weren't interested in
Yeah.
shorts. Very interesting to observe.
Yeah, it's short at support, long at resistance is
Yeah.
typically the name of the game
Oh,
for most that are
oh,
inexperienced. And
no.
honestly, it's a major support area. So, I mean, the
Yeah.
initial bounce off of the zone was not unexpected. It was more
Correct.
about whether or not we get continuation. Now, do
Yeah.
you use, because I see you have a few different major levels on here that you've defined. Can you explain a few of those?
Yeah. 100%. Like, so I like to know, I'll go to the quarterly chart, right? I'll go to the quarterly chart and I'll look at where we currently are, and I'll say, okay, this is the current quarter's candle. So this candle represents all of this quarter, the last, 3 months, or, 3 months minus 11 days worth of price action. But this was last quarter. So the first 3 months of this year were represented by this candle, from open, high, low to close, right? Like, this was all of it. And I want to know where these levels are. So I'll mark these out. I'll just come out here and I'll quickly do it live so you guys can see it. But when oops, I took off the wrong thing. When I come to a chart like this, and I'll even do it with the monthly levels, but I'll come on here, and I'm sure there's an indicator that already could do it for you, or you could probably program it to automatically do it for you. But maybe it's the being a little bit older. Like, I just value some of like the manual stuff of like doing it yourself. I think there's value in that, just like writing on a notepad still, instead of just pulling up like a notepad on my computer and typing in a note. Like, there's something about just like getting the pencil and writing it down, or a pen, right? And so I like to come on here and I'll say, okay, here's the low of last quarter. I'll put a quick horizontal on the low. I'll put a quick horizontal on the high, and I mark those out. And I built a template that automatically lets me label it. So, prior quarter high, and it colors it in the color that I choose. And then I'll do the low. And then I'll zoom in to the next smaller time frame, which for me would be the monthly. And then here, let's just clean this up. We'll anchor it correctly. And then I'll do the same thing here, and I'll say, okay, where was the low of last month? That was the low of last month. Where was the high of last month? That was the high of last month, right? Because these are now monthly candles. This is the current month's candle. This was last month's candle. So, and that same thing, I've got a template built in here where if I right click on this horizontal trend line here, I'll go in there and I'll just pick here the prior month high, and then I'll put in here the low of last month as well, PML. And so I like to go through and I label these. That way, when I'm zooming in, the reason I do that is like, as I start to zoom in more, and if I'm trading on a 15-minute, right, or I'm looking at structure on a 1 hour, I know where the bigger picture key levels are, and I don't get lost in the sauce, if you will, right? Like, I won't get lost
Yeah.
in the noise that inevitably is present in the lower time frames. And I always know where I am. I like one of the most impactful mentors that I had when it comes to trading. He would just preach over and over. He was really hard on location, 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 location. Most traders are just looking at price, right? They're looking at price, they're looking at time, but they're not looking at location. Like, where are you relative to the location of the broader trend? Like, in time and space, where am I? Am I closer to the low of the month? Am I closer to the high of the month? Like, location mattered, not just the current price, not just the date and the time, but like the location. And so this is something that I've always used, is like, I want to know where the monthly open is, the weekly open, and those I use an indicator for. But for these levels, like the high of the month, high of the quarter, I just mark these out. And so then, you just end up going in and marking them out. You just go to the next one. You go from quarterly to monthly to weekly to daily, and you can mark these out, whatever you find valuable. I like to for sure at least have the quarterly, the monthly, and the weekly. Daily, it's like, well, you can kind of eyeball where the daily levels are. But I like to have these on here. And then I know, right?
Yeah.
So I know what I'm looking at here. And this 3-day RH one, that's a 3-day range high. So that one is off of the 3-day chart. You'll notice that this 3-day candle from back here at the beginning of the month, this is an interesting candle because we've effectively just been trapped inside that internal structure here. We haven't really had a candle that's gone outside of either the high or the low. And to me, that's interesting
Mhm.
because I want to see at some point, do we trap a high or do we trap a low with a deviation and then head the other way? And I thought that's what we might have been doing on this last move, Landy. And we just came so close to it. We came so close to it. We didn't touch it. This is why I'm still maintaining a slightly, a cautiously optimistic or slightly bullish outlook here. I would like to see, because Bitcoin has done this, and I'll show it to you guys, 2 other examples in the past of why this is important to me. But I would like to see this come up, and if it is in fact going lower, if we are going to lose 60K as support, I would like at least a move above here before we go down, and I'll show you guys why. And we don't have it yet. We don't have it yet. So I would like at least this to come up and then trap essentially above that, fake out or a deviation. And then that would build sufficient liquidity below all of the structure at these lows that I think that would fuel the ability for price to move significantly lower. So let me show you 2 real quick. I'll show you 2 examples of why
Sure.
this is important and where you can look at it. So if you go to the weekly chart on BTC, you'll notice this candle here on BTC, the one that set the 60K low.
Yep.
Boom. That should be immediately evident that
Yep.
we were inside that range until what? Until we had a deviation above. That deviation above meant that we had built up enough liquidity here on this internal structure that we could then go fully across the range. Okay.
Mhm.
We did it again back here as well. Same example. Same
Yep.
thing. You needed to build up enough liquidity on the internal structure, lead up to a fake out, essentially, get people off sides, right? Get people max longing the high to fuel the move across the range. So I'm
Yeah.
Well,
looking for
that
that to
actually
happen on a smaller scale here. Go ahead, Nat.
that actually lines up with a liquidity grab to the top. And you see how the
Yeah.
price gravitates, grabs the liquidity to the top, does a
Yep.
flash move to the top, and then gravitates to where it needs to go. And then again,
Yep.
it does a liquidity grab to the top and then gravitates to where it needs to go. It's
Yep.
beautiful how these things all line up.
Yeah.
Yeah. And if you were to compare that to like a market monkey that Nat was just showing, what Bits is explaining is exactly what ends up happening is on that move up, you get all those orders that come in and
Hmm.
all those stop losses that are along the way as price moves up. That
Yes,
then is the fuel for that downside to go and grab it all.
Yeah. You
correct,
would see it all right
correct.
here. Like if you were looking at that heat map, you'd be seeing this like below all of these levels.
Yes,
You'd be seeing all this.
yes.
And then as
Yep.
it's coming down, it's just this is the fuel. This is the fuel. On the way down, everyone closing these, those are spot sells, right? So it's just like boom,
Yep,
boom. It's just triggering
yep.
all the way down. Yeah.
Yep.
This is so beautiful. Look at how everything lines up. My liquidity, your charts, Landy's levels,
Yep.
beautiful.
Yep.
Yeah, and the really cool part is you can go through and you can look at the liquidation heat maps and you're gonna see the exact
Yeah.
same thing,
Yeah.
on that way down. And,
Yeah.
it's and it's not always so, for those in the audience who might not be familiar with liquidity levels, I did mention it briefly earlier. It's not always liquidations, right? There are
Correct.
specific parameters that trigger a liquidation versus a stop. But essentially, on that way up, like what Bits was just drawing out on the chart on the way up, that you could see when Nat had her chart up on Market Monkey, and what was the other one called, Nat?
Kiyotaka.
Kiyotaka. Yeah.
Kiyotaka. So those primarily are going to be stops in most cases, unless somebody's stupidly high leverage, like right near like a higher low on the way up or something, and vice versa. On the when we're in a bull market on the other side of that. So this is beautiful confluence, and that's really what it comes down to. Is different methodologies, but coming to many similar conclusions about the outlook and potential, obviously with invalidations, right? Like
Sure.
that's one of the most important parts in any type of technical analysis, and potential areas of interest that you're identifying is that there is the other side, and what are the conditions that need to be met for the other side. So I wanted to ask you a little bit about that, because I know what it is that you're looking for. At what point, Bits, would you not be looking for that potential move above to grab that liquidity overhead? Where does that change for you?
Sure. Sure. I can tell you, like, here in this localized structure, I really don't want to see us move significantly below these lows here. If it is going to move higher, um, if we come down and we take this structure here, although that could still have a temporary bounce, because it would be essentially like, if you're thinking about like a horizontal range, right? You have this weekly range here from last
Yeah.
week high to last week low. So although this could come down and you could still see a sweep of that range and probably see a move higher, um, I don't know that I'm looking for a move, up to here anymore, or even higher than that. I think this would likely induce some type of short term bounce, but it would probably be, maybe up to about here, and then you'd see it maybe roll over. So for me, if it hadn't taken the high of last week, so for example, if last week's highs were untapped, much like last week's lows are, then I would be looking for a bounce on a sweep here for it to take that out. But now that it's taken it, I really don't want it to also come and take the lows, right? I want it
Yeah.
to, at that point, maintain somewhere here about the mid range of that larger weekly range, and see if it can't get continuation higher and maintain a higher low structure. So for me, this is a pretty key area. I want to see a bounce here without a move below last Tuesday, last Wednesday, which established the lows of last week. If it did that, again, I do think there is like a bounce opportunity, but I'd be more interested in trying to short that bounce as opposed to trying to get continuation. Whereas like right now, if this continues, even if it were to come down, sweep here, and then do something like that, but it maintained above here, I am still looking for a move potentially, to run at least that high here, this swing high that we put in last week and early this week, but also to potentially maybe even come up here to last month's low, which is kind of getting into those low 70s.
Yeah.
And this fits that. Like, I think I had shared this last time we came on, but I got too many things drawn on here.
Me too, by the way. I have so much. I just
Golly.
hide it in folders. I just dump it all in folders.
Sometimes I'll put it. Sometimes I put it in groups and folders. Like sometimes I do, but I think it's this one. No, this one. No, hold on. Golly, this no. No. Hold on. Which
We'll
one?
get
Which
there.
one?
Process of
Hold on.
elimination. We'll get
Here.
it.
This is this. No. Hold on. This one. No. Okay. Hold on. What the
We're getting
heck?
closer. It's fine. We're
Is it
getting
this one?
closer.
No. Look,
This is usually where, by the way, this is usually
there it
where
is.
I wish I.
There it is.
Okay. This is usually where I go, man, I should have eaten the crayons and stopped drawing.
No, look, I save a lot of stuff, and I also save the stuff that doesn't play out. I save the stuff
Yeah.
that doesn't play out, and a lot of it wasn't even what we were expecting to play out as like the highest likelihood. It was just I always give like a bull case and a bear case, and then I give my leaning as to like, well, here's the bull case, here's the bear case, but I think the bull case is playing out over the bear case, right? And I leave both of those on because I like to go back and I like to study them and then say, okay, this didn't play out. What are the things now in hindsight that maybe I missed that could have, given that either more or less likelihood, right? But yeah, look, this is that little W thing that I drew out. I don't know if this was last week. It was definitely before this move up happened, because I
Yes.
remember talking with Ash, and I think it was with you. I think we talked about it, and this right side of the W had not formed.
Yeah.
The left side was done, and I think it was pulling back. And I was saying, look, I want to bounce around 61, and then I think something like this could be in play. So look, it hasn't been perfect. I thought it was going to sweep that 3-day range high. It did not. I thought it was gonna, if it did do that, it would get a pullback. It pulled back anyways without the sweep, and it went a little bit deeper. But overall, I would say this is still valid. I would say this is simply now looking like this. Like
Yep.
it's the sweep of the range high is now probably going to get ran, instead of it being an initial rejection that needs to pull back. This is likely to now run that, and then probably encounter rejection a little bit above that, which would then just come back and just continue this higher high, higher low type structure, until something changes.
Yep.
So, it's close. It's close enough. It's not perfect. TA isn't meant to be perfect. It's meant to help you better understand like the flow of the market and how things go up and how things go down, right? And that there's a balance between them, how it finds equilibrium in that process. But yeah, if this breaks that low, then to me this is not playing out. That's why that's my
Yeah.
invalidation. Even if it gave a bounce, it's not this W with a pullback for higher that I'm looking for. It's something else at play. Maybe it'll range here for a while. Maybe it'll range and then break lower, right?
I think
Yeah.
every good trader has their invalidations, right? We all
Yeah,
have it. When we're in longs, we have an invalidation, like, okay, this long is not going to work out. When we're
yeah,
sure, we're like, okay, if it breaks this level, it's the short is not going to work out.
yeah, 100%.
Yeah, and I think your invalidation is likely right around that last daily high or low, if I'm reading your chart correctly.
Yep, yep,
Yeah. So, and I think most people that are practiced in this understand it. If we get a trend break back to the downside, the lows are back in play. I mean, that's
sure.
in like you said, a bounce is probably in store, but it's all about now the other side of this emerging downtrend that you have on the lower term time frames, right?
Hmm.
Because then you have a structure break on the daily,
Yep.
you have a downtrend developing on the lower term time frames, and then of
Yes.
course, I'm going to briefly switch over to my
Go for
chart because I think and you're welcome to keep your charts up. By the way, I can auto switch them, but when I look at price action, as it relates to my levels, which I have a mess, and I get people that complain to me about the mess all the time, but I like the mess. It's a coherent mess that only I understand, and it keeps people watching because then I have to explain it every time.
You may
Um,
need to start putting a warning though, like what is that one that they put in front of a movie sometimes for epilepsy? I think, right? Like,
yeah,
warning.
warning, warning.
Bright
These
colors and
Uh,
bright lights and things may cause epilepsy.
you know what's funny is Nat showed us 2 charts in a row. They were not light mode, and I was shocked. I was
I didn't pick up on that.
yeah, you know what? I
I didn't
because
know.
I feel bad. I feel so bad because Bit eyes were burning out with like the three charts that I showed earlier today. So I felt bad.
just got smoking
No,
holes where his eyes were.
yeah. No, I'm kidding. So with the Market Monkey terminal and in Kiyotaka, in order to see like the yellow lines better, it works best on a dark background.
Yeah. Well, I often use yellow as the demarcation points on my chart here, but one of the things that is really telling here is that the next move is loading, right? So we had the big expansive move down, the consolidation, and then we started to recover into an uptrending structure before a retest, but then we started to just slowly climb up. And but it was in when you see this, often everyone hears the bulls take the stairs, the bears take the elevator, and that's what we saw. It was compression, loss of structure at the highs, and then expansion back to the lows. Well, we're setting up for another compression to expansion phase. So it really is, in this case, based on some of what the two of you showed me, and kind of the confluences across everything that we've been looking at today. is that if we were to start breaking towards the top side, towards 68, for instance, you've got an upper second standard deviation. So moving from expansion into compression, typically what you see is compressions as we're moving from an expansion into compression, you will get either resolution or rejection. So at a second standard deviation away from a mean. So to the downside, a bounce at the lows, 58 to 60, like Bits had speculated. If we lose the low, you would see the initial bounce, but likely we'd see that resolve to the downside towards toward as it starts to break and expand down off of the initial bounce. And that is the transitionary period between expansion or compression to expansion. So for instance, we had a range compression on the way up. We hit the downside lower second standard deviation, got the initial bounce, just a little one, and then started to actually initiate that expansion to the downside with the band starting to turn with price action here. And then it rode the bands down into the actual liquidity zones for that expansion to grab liquidity before mean reversion. And this would be something where, with the gap in liquidity to the upside, you could see a fast move to 68, potentially 70 by the upper third. But we would need to see, from me, to start raising targets for me to the 72 to 74, for instance. I would need to see closes above 68 that can start to get above the $70,000 resistance in an expansive phase. Um, so I would actually like to see tighter compression. I actually don't want to see this run immediately. I want to see how the rest of the weekend goes as these bands compress in on price action. We're going to get a really well defined compression to expansion for the band set for me. But this is only, of course, one portion of a larger set of things that I consider when looking at price action as it relates to volatility. So for those that are new, because there are a few new people here, I evaluate price in the basics that just about everybody does, even if you're using a system that you adhere to. Every system, what underpins it is trend, support and resistance, which is just the swing points and trend, volatility and momentum. And then there's different systems that are built around that incorporate it. Sometimes people break it up in different ways to identify things. There's entire fields of study around all of it that incorporate a lot of this stuff. But I just find it very interesting, the confluence for where I'm seeing things line up and you guys are seeing things line up, which shouldn't be that, for anybody practiced in technical analysis, shouldn't be that surprising. But this is where I think things do get interesting for a lot of the speculation that I think we're seeing online, and that is the weekly. The weekly is something that is starting to, I just briefly pointed out the bottom side here, lining up with 60K as the low. If it's lost on a weekly close, that's when we initiate expansion. Additional checkpoint would be closing below the most recent low, but usually you can monitor lower term timeframes if we start breaching the lower second. These act as pivot points, but they also act as conditions. So if we break below the lower second, which is at 60K, and we close below there, that's initiating expansion to the downside. You go wick to the next area, and then essentially, for the way that I evaluate the system and I show people on my charts, which is marked out, that's going to be this low over here, which, by the way, we already hit. So where's the next area? Then we've got, the mid 50s, 55 to 56, and then we've got 54. Those are your weekly levels on your closes. Your low, 52 and a half, your 49K, which is essentially your 48 240 over here, 49K, big pivot point. So that is to say that if we did see something, what would everybody keeps asking me, what would change my mind now? My invalidation for looking for a significant downside move into the 50K area, potentially opening up mid 40s and under, was $98,000 before we put in the 82 and a half, 82.8, which of course is the monthly close open last higher low that was breached. So if we were to reclaim that, so everybody's like, well, what would make you convinced that 60K would be the low? Is if we saw this taken out. on a close and in an expansive fashion. Because if we're going to take that out, that doesn't mean, by the way, that it's bull run on, but likely a bull turn in the market for the longer term. And in this case, above 82.8 to 83 here, that big monthly level, we would likely get expansion right up to retest around 86, which is, the close open here, the close opens over here to that 98,000, $100,000 area. Now, that's where things could potentially change. And I've speculated, because I do like to speculate the other side of this, because I am still in the camp of looking into the mid to low 50s from here. Is if we saw something like this that either, did one of these and started to head up, or we saw something like this that started to breach this way on expansion, then come down in higher low fashion, then work its way up. Right. So one of those two scenarios would be something that I'd be looking for. And one of the main reasons why is because if we do set a low here, we would start to see bullish divergence develop. And then you can get bullish divergence off of higher low structure locally as it relates to the rest of this structure over here. In addition to changing trend on longer term timeframes, but it would need to take a while. I wouldn't want to see it be a quick local move. I would want to see it develop over time, over the course of weeks, maybe through the summer or something like that. That is the only case in which I'd be looking at this area developing into a macro low structure, of which it is not at the moment. But not by any measure in my book. So I often get that question. I just saw that question come through. So wanted to kind of dip into that. I don't think that either one of you would disagree with that, correct? I think Nat might have. Oh no,
Oh
Nat's
yeah.
still there.
Yeah, no, no. I 100% agree. I think for me, because the conversation has been a lot on the 4-year cycle, or in terms of when we bottom, I think it would invalidate um the October bottom if we start to see closes above 100K prior to that. And it's not setting up for that on my end just yet, but I think a move above 82 to 83 would kind of start that, in my opinion. So
Yeah,
we're
I mean,
kind of in line.
I would need to see a higher low, right? Like that's what I would
Yep.
need to see after that. I need to see the trend actually break, whether it be above the 82.5, or if we got it more locally, like a shallow bounce to a lower high with no continuation, and we saw a higher low come in. But I would need to see it last through. And in this case, I would need to see it last through, the summer coming into fall.
Yep.
I wouldn't want to see it very quickly with just a couple of candles. I would want to see this move develop and consolidate in this area to actually form a low. And then we also have to remember that, as always in validation, we'll be breaking down, and we have a very good example of that. We have a very good example of that did not. We had higher low, no higher high structure, but we had a very good example of, consolidation that broke down. But it was all about structure. There was nothing to be excited about here, even off the slightly higher lows here. When you put in a lower high and go sideways right on support, yeah, that's not good. Um, so, I think that there's been a lot of fear in the markets. And I think there is this like real palpable fear of going lower, like that's going to substantially change anything, and like everything's over. We hear this every market, every bear cycle, and it's not really. That's not, unless you really are in the camp of Bitcoin go to zero. Most of it's just fear porn on the
Yep.
internet. So
I 100% agree. And I think I think when it gets to the point of when you look on your timeline, you log in on X, you look on your timeline, and everyone's screaming, everyone's freaking out, everyone's saying Bitcoin is going to zero. That's usually around the time where things turn around. Because as you say, Landy, it looks but dumpiest before bumpiest.
yep, dumpiest before pumpiest, and pumpiest before dumpiest. And look,
Exactly.
I stole that from every KOL that is ever, but in some sense they are, in some sense they are correct. Obviously, do not take that as a, oh well, it's dumpiest before pumpiest. We literally just got dumpy right into this area. We have
Yes.
we are awaiting to see if it goes pumpy. Um,
If it gets dumpy,
Or
it
the
could get dumpier. And if it,
and if it gets dumpier, it could get dumpiest.
Yeah, just because you're getting dumpy doesn't mean you're gonna get pumpy.
Yeah, yeah, it doesn't not that this is not yeah. Remember,
You can get dumpy to dumpy before
yeah, you
pumpy to
could
That's
pumpy.
right.
yeah, it's and look, I see a lot of people going, "Well, it can't possibly get worse from here." Like, no, no,
Oh
no, it can
boy.
always get worse from here.
Oh boy.
It can.
But
It can. We're not there yet. We're not at the max fear where everyone's crying and Bitcoin's going to zero. So we we've got some ways to go if we're heading to, some lower targets.
and
Yeah.
Nat, I know that I don't know if you've seen this, but I'm sure you've heard this from me. And I'm not sure because the two of you joined me for the inaugural episode of this, which I really appreciate a couple of weeks ago. And then of course
We
Bits
need an
is
NFT or something like that to like remember
yeah,
that.
I
Yeah.
we probably should. We should
You
make
need a
it
G
poll app.
Media G Media needs to do some NFTs or something, and we get like some special ones or something. I don't know.
I'm in
Yeah,
favor
they're
of
called like
ordinals
co-op.
because they're dead.
There you go. There
Oh,
you go.
that's funny.
Or ordinals are dead is actually a collection. Maybe we should sweep some of those and do a custom. But one of the big things that I have expressed over and over and over again, and I wanted to give some. I know that you might have seen this before, but there are of course new people as they kind of either beginning to follow me or following me over from you guys reposting to see this. Lower second standard deviation is right at that 58 to 60 level. If we drop it on a monthly time frame and start closing this monthly, which is one of the reasons
Yeah.
why Bits and Nat have talked about this many times on spaces, on streams, I'm sure with Lady Trader. Bits does streams every day, by the way. Wolf Bitcoin. Nat's Nat's been streaming over there with the Wolf Bitcoin crew with Lady Traders,
Yep.
FOMO Fridays, right? Am I
Yep.
saying that right? Yeah, and then of course everybody knows Bits from being Bits, but of course the Wolf Bitcoin, he is a host over there, regular host on Spaces co-hosting, and then of course shout out to Cade, love Cade.
Yep.
And then of course he's doing regular live streams. So if you're following me and you're not following Bits and Nat, hit that main post that I put out there. It's got their socials for X in it. Please follow them because they are some of the best in the game. And they're always live. And of course, Nat's on stage with ATC. She is the mainstay of ATC. She is so important to ATC that I was a bench warmer and she was always in the title. ATC with Dave Cool and Nat, and I was bench warming for her for a while. And it was always a seat that I was waiting to give back up, and I'm so happy that I was able to. And then, of course, you can always catch Nat on Wolf Bitcoin. But one of the key things that I wanted to end with here is if we do close a monthly below the lows, we are likely going to do what I call a price replace band. It's something that I talked about with Mr. Spread, who you both know, excellent analyst and all around great person. He's he is probably he's probably up there amongst my favorite traders that I regularly try to check in with. And then, of course, I've gotten to know him pretty recently in the past year or two, and just like top tier. If you're not following him, make sure you are. But one of the things that I talked to him about was a price replace band. If we do close below lower
Mm.
second standard deviation on a monthly, we are looking right into the close open candle, right into a major liquidity zone where we saw institutions get heavily involved in Bitcoin before the pump to the new all-time high prior to halving. And that would be right around the 42 and a half to obviously the close open and the highs here in the mid 40s. So for those that are very bullish on this area becoming the low, you have pretty clear criteria. You don't want to see weeklies closing below this most recent low.
Yeah.
You do not want to see, if we do and wick back in, you want to make sure that you're watching that monthly because you don't want to see the monthly close below there, because that would trigger one of my main criteria for looking for not just 50s, but potentially low to mid 40s and even opening that door, Nat. And this is, we don't know.
No.
I'm not saying it's going to happen, but even opening that door to the upper 30s, because there is, the potential for actual expansion down. And there's
Yep.
that 35 right there on a close open. And of course we have
There you
38
go.
and a half. But level by level, day by day, week by week, conditions need to be met. Invalidations are pretty clear. I really want to thank the two of you. I really appreciate. I just love talking to you.
Of
I could
course.
geek out and talk to the two of you all day about charts. So
So
Man,
can we? That's
this
why
was
we're
so
on
awesome.
Spaces all freaking day long.
I know. So for those that don't know, Bits is going to coax Cade into some sort of 24 hours. I know that it's going to happen at some point.
I'm working on it.
I
We
don't
did
know
a
how
12
you're going to do it.
hour, for those that don't know. There was a 12-hour space not too long ago.
Yeah.
Yeah. Yeah. We were hopping in and out. Me and Nat were hopping in and out multiple. You guys are still here.
Yeah, I was shocked. I was like, "Whoa, is this the same space from earlier? Oh my god!"
But yeah. But definitely do appreciate the two of you taking the time on a Friday. I hope that you
Likewise.
both have a wonderful weekend. Thank you for joining me. And to the audience out there, I want to thank you for tuning in. Please like and share this out there. I think that the two of them give some of the most valuable information that you can find. And you can ignore my analysis. You can look at their stuff. You can validate what I'm looking at versus what theirs for the regular viewers, and you can tell that they are top notch. You should be liking and sharing this out there and making sure that you go and pump those follows up because they're some of the best follows in the game. I hope that everybody out there has a wonderful morning, afternoon, and evening, no matter where you are in the world. Please trade safe. And of course, as always, stay safe and have a great weekend. With all of that being said, for myself, Bits, and Nat, we are out. Take care.
Peace.